SharpLink Gaming is making headlines with a bold move, raising $425 million to fund a treasury strategy centered entirely around Ethereum. It's a shift that mirrors what MicroStrategy did for Bitcoin, and it could signal a new phase in how corporations manage their balance sheets with crypto. The funding came through a private investment in public equity deal, also known as a PIPE. It was led by Consensys, the software firm founded by Ethereum co-founder Joseph Lubin. Other backers included top-tier crypto venture capital firms like Pantera Capital, Galaxy Digital, Parify Capital, and Electric Capital. Even SharpLink executives put skin in the game, showing internal confidence in this strategic pivot. SharpLink plans to use a significant portion of the funds to acquire ETH, making Ethereum its primary treasury reserve asset. CEO Rob Fythian called this a milestone in the company's journey, expanding beyond its core gaming and betting infrastructure business into the world of digital asset management. Joseph Lubin also weighed in, calling it an exciting step for Ethereum's evolution into mainstream finance. His involvement adds serious weight to the move, given his history shaping Ethereum's development and his ongoing leadership at Consensys. This isn't just about one company, though. The strategy reflects a growing trend of firms diversifying into crypto reserves. While Bitcoin has historically been the go-to asset, Ethereum is quickly emerging as a viable alternative. We've seen this before. MicroStrategy, now branded as Strategy, famously led the charge by buying billions in Bitcoin. Tesla followed shortly after. Other names like Rumble and GameStop also jumped on the trend, integrating crypto into their treasury frameworks. But what's different now is that Ethereum is entering the conversation. SharpLink could become the Ethereum equivalent of MicroStrategy, a publicly traded company holding ETH as its primary balance sheet asset. This move could encourage more firms to adopt similar strategies. And it's not just ETH. Other firms are beginning to experiment with altcoin reserves. Smaller companies like Sol Strategies, Upexi, and DeFi Development Corp have looked into holding Solana. This hints at a broader shift toward crypto-native asset diversification in corporate finance. From a market perspective, Ethereum is already showing strong momentum. Over the past 30 days, ETH is up nearly 47% against the dollar, outperforming Bitcoin, which gained about 16% in the same time frame. Even so, Ethereum still trades roughly 45% below its all-time high of $4,867. That means there's room to run. And SharpLink's move is betting on exactly that. According to CoinCodex's algorithmic forecast, Ethereum could climb above $5,000 by the end of 2025 before entering a correction and settling near the $3,000 range. That would represent both short-term upside and long-term maturity as Ethereum becomes more integrated into institutional portfolios. This move by SharpLink could be a spark for a wider wave of ETH-focused treasury strategies, especially as Ethereum's utility and staking ecosystem continue to grow. And as more corporate players step into the crypto space, ETH could start to take on the same role Bitcoin has played, but with a smart contract twist. In short, SharpLink isn't just buying Ethereum. They're helping legitimize it as a balance sheet asset, and potentially kicking off a new chapter in crypto finance history.